Good morning, Scott Redler, T3 Live. Welcome to today's morning call. This is the relaxed morning call. This is the Friday morning call after a long week. So finally last night, the Greece situation is out of the way for now. Everyone's going to say, oh, but it's not solved. What's it going to lead to? Is Italy going to be next? Is it going to be Spain? Can they, could the ECB, they're saying they're done after their two big attempts to give liquidity and put the firewall out there. These are all things that we're going to have to probably deal with as we move forward. But as of today, they had enough, I guess they had enough people vote on it. I think it was over 85%. So that's done. I think that at 2 o'clock, there is some kind of vote as far as something with the debt default swap. So we'll have to see if something transpires there. And then also the jobs number is out of the way. A lot of traders were worried about whether they were going to go home short, long, after the 2-day snapback. Jobs numbers came in, and they were pretty solid. Revisions were up. A lot of the conspiracy guys say that that they have good reports if numbers are fudge, and then they revise them all down months after because they weren't real. Now they were strong last month, and they revised them up, and then this month came in good too. So it's showing a positive trend of economic data. So you can't really argue with it, and you can't really argue with the action. I know this week has been a tough week. There was a lot of different types of movement going on. As far as the two different time frames that we continue to talk about, the macro time frame and the momentum time frame. Monday, we closed below that 10-day moving average, giving us some clues or some thoughts to get out of stocks, maybe get short. And if you did so, you got paid on Tuesday. Tuesday was the biggest down day of the year. I think a lot of people did cover into Tuesday, but it was hard to switch gears and just buying back multiple positions or going back to 8 to 15 positions like I was for 2 months from December 20th leading into Monday. But that's fine. There was a lot of unknowns. We weren't sure whether that Tuesday low is the low. Okay, we weren't sure that 25% Fibonacci retracement, which is very high, was enough. And we needed more data. So now after a full week of trading, let's take a look at the chart and see where we are. Okay, if you look at I'll show you the spiders, okay? Here is the macro trend, from the lows and the spiders, higher low. And actually the spiders looks a little bit different. Another higher low. So looks like it held the macro area after breaking that little short-term momentum. So if we take a closer look here, you will see that we did break this accelerated uptrend. So it was worth being prudent, risk averse, getting out of some stocks, and here was that down move. Okay, it was pretty muted, came right into a prior support that we were talking about. Look at the congestion coming along right there. That's about 1340 on the S&P that we were talking about. And you had a nice 2-day snapback, and we're up a little bit. So now I would say resistance here on the spiders, if you're trading them, is 137.82, and then the high of the year is 138.18. Now there are going to be some bears that come out, and if they sell them today, which is a big if, they're saying now, I'm hearing rumblings from technicians that this could be the start of a head and shoulders top. Here's your left shoulder, your head, your right shoulder, and then this would then be your neckline. And then obviously, if we were to break that, then they get a further correction. But that's really, really thinking ahead. If you look at the SPX, you can see it a little bit, different or it's somewhat the same, where if they were to sell today, okay, and doesn't still mean it's a head and shoulders top. And if you kind of take this out of the way, right, so you don't have to see that, and we kind of change the pattern up just a little bit, because right now you could say that we're going into some sort of sideways channel here, right? This is like a sideways channel as we digest this last big move. So if they were, here you say this is the left shoulder, the head. If they were to pause it and reverse it on this news and sell it off, which I'm not sure if they would, here then is a small head and shoulders top formation, but you need a lot more data for that. To me, I think the market acted pretty healthy this week and constructive. You saw some breakouts continue, like Starbucks yesterday. You take a look at Starbucks, no bear market here, right? Look at that move, big 2-day move. Congrats to Jill. We talked about this in our options profits, I believe last Thursday, right around here. Good move up another $2 today, showing you could be a stock picker. And then for those, I think people were shorting GMCR, that's down like $8, $9. If you look at retail, I think if we were about to be in a further correction, I don't think they would have let the RTHs make new highs. okay, and show this relative strength and continue higher, that probably would have been muted. They would have failed it here instead of closing on the highs and opening up. So retail is telling me that we're not seeing a head and shoulders top form. It was more of just a consolidation. And within retail, we spoke about Coach yesterday. Nice little move. We talked about support. This is what we drew. Yesterday tried to break out. Lulu, we've talked about it so many times this year. Nice moves, trending higher, a little bit of a breakout, came back and retested at the highs. Good for the stock pickers. Yeah, a little choppy for the traders. Even something like Macy's, trending higher. I don't think they would, have Macy's at all-time highs here if we were about to correct. Showed you guys Target also. Look at that. Another nice bull flag continuation. Look at this pattern, guys. I'm surprised that I haven't been trading it because this is like perfectly set up. Here's when it broke the downtrend. You had a nice move higher, little bull flag, went sideways. You could have added when it went above this area. Nice 2-day move. This time we needed like 4 or 5 days to consolidate, considering the size of this breakout. And then there you go again. That's Target. That's not a tech stock. So there's a lot of spots that you can't ignore. And then you turn to tech, something like Apple. They couldn't sell. They did for maybe 20 minutes the event. With the new iPad, and if you look at it right now, it's coming right back to a top of a new wedge here. Apple likes to stutter step higher. This was after the earnings gap went sideways. Nice little entry here, if that's what you were looking for. Then it started to get momentum above the previous high. Then you had some trades in here with the outside reversal before it held a 10-day. Then it continued, took out that high, showing you that there was actually no power here. And we talked about yesterday in the recap. If you were looking, with your retracement rules, right when it broke halfway above this outside day, you had to say, you know what, Apple can continue higher. And then here's another nice macro wedge, okay? This is when it held the 20-day this time on that really nasty Tuesday. You remember we talked about it. That showed some relative strength. We had a nice little 2-day trade there yesterday. It was strong, and now you have a nice little downtrend here. So I would look today for clues to see whether or not they let Apple take out this last little area of resistance, because if it starts to get above 548.21, if you were short, you'd be scared and you'd have to cover. And for those thinking 600, 660, it's going to have to get through here to get there. So that's why we like patterns. So it looks decent. As far as some other patterns, I wasn't on top of this yesterday, but some of the traders have been watching Amazon get a bit stronger. I still think it has a lot to prove, but as a trader, there was a lot of cash flow there yesterday. If you look at Amazon, we put it on the price point sheet also yesterday. But again, I don't have to trade everything, but if you look here, nice little trade, right? Like guys are talking about 185-ish to clear this middle area, and it did. And it cleared it, and it closed pretty well. And now you have another little macro downtrend to see if it'll break above this lower pivot. I was buying puts in here, thinking perhaps it would break this support, and it didn't. So I sold them. I'll move on. See what happens next. I won't trade it because Amazon I don't do really well with, so I'll let other people use Amazon. And Amazon could, if the market stays strong, it could bounce back. But it's showing relative weakness. This is more like a new entry type of trade for a trader to see if complexion will change. Google, nothing really going on here. It's trying to hold this sideways trend. Still looks okay. I still think longer term it's going to be fine, but within this range, it's pretty choppy and it's been hard to trade. It's been holding above the 600 with some more time. Maybe we'll get a better trade going into next quarter. So at this point, I don't think traders are having too much success here. Just let it go. Same way with Netflix. Netflix was a great trade in the beginning of the year, right? Just shows you how you can love them and leave them as a trader and then put them down on different lists. When Netflix broke this area, this was on my A list. I talked about it every single day. You had a nice bull flag, continued higher. Then on earnings, you had a nice gap up, held the gap up, continued all the way to this outside day. Then on this outside day, after a move from 70 and change to almost 130, it was time to, take a different approach. And since then, you could have been trailing it short and made a lot of money, or you had a few 2-day trades right here into here. And then remember when it broke this little area with some potency there, it led to another move lower. So now you could argue that you have a descending channel here. Okay, and we all know descending channels typically break to the upside because when downtrends get broken here, like you have a high, lower high, lower high, you need to see if that changes. It could continue and continue in this trend, but if it changes and there's volume, we'll be on top of that and maybe, it'll get exciting again. But until then, I think it's on the sideline. LinkedIn, looking good. A lot of these new issues started waking up. It was on our radar after earnings, if you guys remember. Let me get this out of the way here. I'll put it over here. This is when you had nice earnings, and then it held in there pretty well, flagged, didn't even get back to this earnings area. Here is when we caught a nice little trade. Tried to poke its head above 95, wasn't ready. I know there was a lockup, so there's been some just selling. If you own the stock at 22 or 30 from the deal, why wouldn't you sell and lock in some? Maybe it's dried up. So now if you take a look here, it looks good. Yesterday, I know guys were all over it. I went a little long also towards the end of the day. I think above the high here of yesterday, 91.38. The next level could be 95, and then it could continue. They probably want to keep this one strong. You have Facebook, I think, in May. If they want to talk about a $200 billion valuation after Facebook opens, they're going to have to, give this one a decent one as well, somewhat, and that's not even close. And then some of the other ones, like the Yandex, looks okay. I wouldn't get too excited, but it's starting to move higher. Broke above this little range that we talked about yesterday. It could continue. Some of these little guys are waking up somewhat. Next real level here, I would say, is right around 26. I went over Dunkin Donuts yesterday. Love it. Short term, long term. I think yesterday, finally, you had a nice breakout here. This was the IPO high here. It was a nice consolidation. Institutions getting in there, 8-9 months of accumulation. Finally, yesterday, it broke out. I think above yesterday's high of about 30, 40. We'll see 32 at some point. I don't think it happens in a day, but who knows? But then I think we test that area. And then I think if you want to hold something for 6 months to a year or to two, I think this is one of them. If you look at Starbucks, okay, when it came public, first I'll go back to Starbucks. It's been an unbelievable investment vehicle for everyone. At new highs, another nice trade. You go to the monthly chart. This came public in 1993, and if you bought it in the first year or whatever, like you made a lot of money riding Starbucks. And Dunkin Donuts is, I think, a very highly rated chain. They're almost a mix of Starbucks and McDonald's in one, and they still have room for growth. And I just think as a new issue, that's where some of the new leaders come from, and Dunkin Donuts has the characteristics, it's probably an IBD as well, to be something you could trade and you could hold, and we'll see how it works out. Right now it looks good short term. As far as stocks like JP Morgan, some of the banks, they're holding in there. You go to the daily chart. Unfortunately, I got out of my JP Morgan. I'm going to need to look for an entry. It came back, tested the 10-day. Couldn't even get down to the support. So that just shows you how there is demand for strong stocks in this one. I'm not sure it's just going to take out this resistance right here yet, but with some more sideways action, it could. Bank of America is kind of interesting as a laggard. I know a lot of people are still invested in it in their IRAs. This was your trade. Now it's been going sideways long enough where it's been holding this area. If you wanted to trade a long verse, 780, at some point, I think it breaks above this little resistance downtrend or resistance range, and you do see 950 this year. So there's still a nice percentage in there. And then the timing mechanisms, the casinos. 2 weeks ago, great trade from Monday to Friday. Then on Friday, actually a week ago today, was a good sale. Then you corrected, and then a lot of people on Tuesday bought like LVS with me. Some people traded it better than I did, because if you look here at LVS, I got long on Tuesday, added a little bit, but I sold at some point by the end of the day on Wednesday, and then look, another day Thursday. So if it's opening up a little bit, if you want to take the cash flow trade, not a bad spot to take it. And if you're looking for a quick little scalp short, if it's up right now, I'm not sure what the futures are doing because I've been in here for a while. Perhaps it needs to go sideways a little bit and maybe wedge, up here, because it's going to need some time to reabsorb what has been a real monster move. Same thing with Win. Nice little two-way trade both ways. You look at this Win. It met our objective very, very quickly after it triggered above this buyable area. Came right back, tested it. You could have bought it. Nice little 3-day scalp. And so today, if it's opening up, maybe you could short it. So I think today, overall, after a 2-day snapback, we're not just going to run away. Right now, I think the spiders are up 30, 40 cents. We're still, we're at 1370. We're about 8 handles below the highs. If we could, if we do take them out, it would surprise me. I think the best case scenario would be digestion. I think if we start doing some work above like 1358 to 1360, because we're up like 4 handles, because sellers are going to try and sell this news. It's the only thing the bears could do right now. They're going to try and sell it, say it was priced in, which might happen. So if they do try and sell it, it'll be interesting to see where we hold, if we could hold higher, and what develops for next week. So I would say that it would be a big win and then we don't have to take out the highs. It would be a big win if I think we stay above 1358 to 1360, go a little sideways, and do some consolidation, let some new price patterns set up, and then eventually, we take out those highs. So with all said and done, continue to figure out who you are as a trader, as an investor. Are you a macro investor that has 8 to 10 positions and trades maybe 15 times a year? You guys didn't even get shaken up. Okay, if you're in quality stocks, so we've been talking about stocks that were above moving averages, going to new highs, it didn't matter to you. What you should look at is we held a 25% retracement. The laggard groups like the OAHs, the Russell, the semis, they all held their 50-day. Strong groups held above their 10, 20 days. Strong stocks, held theirs too and continued to go. So as a macro investor, you have a lot to like. As a momentum trader, everyone handled it different. You could have always looked back and made more money in hindsight. Just look at what you did, dissect it, and then just make a few small changes in the future because we have a long year ahead of us with a lot of action. So at this particular point, it's Friday morning. We'll see what kind of action is. It's been a long week. Make a little bit of money. No need to swing for the fences. And then I might see at the recap, or my buddy Evan Lazarus, who also provides great content, he might be bringing it home for the weekend. Have a great morning trading.
Hi, I'm Sean Hendelman, CEO of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.